We're going to discuss opendoor today. I want to review the essential data, analyze the factors driving its movement, and cover everything else you need to know. First, please ensure you've hit that thumbs up button. Let's get right into it. Opendoor closed yesterday up approximately 9.1%, settling at $7.75. It traded between a low of $7.09 and a high of $8.07, with a total volume of approximately 41 million shares exchanged. The market closure confirmed yesterday was a low-volume session, a trend we're observing across the broader market. I believe institutional investors are currently hesitant, leading to a division in strategy. For instance, the recent economic figures weren't strong. ADP employment came in poorly at 13,000, retail sales hit 0.2% against a 0.3% forecast, and consumer confidence dropped to 88.7 compared to the expected 94.2. None of these indicators were encouraging. However, these figures actually support the recent hints from several Fed speakers about a potential December rate cut, which they suggested due to a weakening labor market. This is why the market is split. Some institutions are investing based on this weak data, while others are focusing on the higher likelihood of a cut. Due to the negative data, the probability of a 25 basis point rate cut has now increased to 84.7%. Institutions view this development as highly favorable for opendoor, which was evident from significant institutional buying in the secondary market yesterday. We saw a large purchase of 2.9 million shares. Generally, any transaction listed with an ask is a purchase. This is precisely why I track this hidden data. It reveals the true actions of major investors. Although algorithmic trading can sometimes artificially suppress the stock price, I believe following the movements of big money is key to long-term success, though I acknowledge I could be wrong. I welcome your thoughts on this strategy. The only positive economic data point released was the PPI, Producer Price Index, related to inflation, which came in at 0.3% against a forecast of 0.5%. However, Fed officials have indicated their primary concern isn't inflation, but rather the labor market. As of this morning, there have been no new SEC filings, press releases, or any substantial corporate news, making the current stock movement entirely speculative. Investors appear focused on the expected rate cut, which would serve as a clear catalyst for opendoor. Social media has also been quiet, with no major statements from Cass or other prominent figures. Cass did comment around 4 hours ago, stating his belief that opendoor is the most AI-native company in its sector, which is a fact we were already aware of. This innovative, disruptive use of AI is precisely why Wall Street generally dislikes opendoor. Regarding short interest, shorts are currently returning 771,000 shares. The short interest stands at 23.28% of the free float, totaling 140.1 million shares shorted overall. While many view opendoor as a short squeeze candidate, I personally don't see that scenario unfolding immediately. It might become possible if they successfully execute the major plans outlined in their last earnings report. For now, general consumer fear in the market is likely restraining most stocks from squeezing. If you disagree, that's fine. I'm here only to interpret the data, not to advise buying or selling. Examining options activity shows approximately 2.6 million calls versus 472,000 puts, with 52% of all options being bullish. Bullish consensus suggests the price will be between $8 and $8.50 by the end of this week, with a surprisingly optimistic expectation for it to exceed $10 next week. I'm unsure of the reason. It might just be hedging. Are you aware of any specific catalyst for opendoor next week, perhaps an interview? Bears are anticipating a drop below $7, and interestingly, a consensus expects it to fall below $4, likely driven by a single large institution, perhaps setting up a low-risk short strangle. Regarding trading mechanics, with the closing price at 775s, the stock sits between the pivot and the S1 support level. 657 is robust support, and 790 is the next resistance/target for when the market opens later today. The stock briefly pushed past 790 yesterday, which suggests that resistance level isn't extremely strong, a good sign. If the market digests the data and moves higher, $7.90 may not hold as a major obstacle, allowing opendoor to climb. Watch for the $9.22 level if the stock can decisively break and hold above $7.90. The chart itself shows technical improvement. Breaking below the 50-day and 10-day moving averages was concerning, but the stock is now rallying and is currently wedged between those two averages. It failed to close above the 50-day average for 2 consecutive days. Typically, when a stock fails to clear a key resistance, consolidation occurs, which we might see later today, followed by a retest of the 50-day moving average later in the week. We must remember that Thursday is a short trading day due to Thanksgiving, and both Thursday and Friday historically see very low volume, which could be an opportunity for opendoor to move higher. The 50-day moving average sits at 787. We are seeing strong willing buyer interest here, which isn't the case for many other speculative stocks, indicating opendoor is receiving an unusual amount of attention. Finally, there hasn't been much article coverage or new analyst ratings. The last rating was a downgrade from Mizuho on the 12th, changing the target from $14 to $8. Analysts seem to be waiting to evaluate opendoor's execution of its future key plans. So, let me know your thoughts. Are you buying, selling, or holding opendoor? Where do you see it going? Are we looking at a breakout retest of that $10 range, or will we see more consolidation? This video is created for informational and entertainment purposes only. Please understand that I am not a financial advisor.